I'm looking at it now. I see you got what 20 out of 29, which is 68.97%. That's actually pretty good,
Yeah.
considering that was the third assessment. If I remember correctly, UNISA used to give two assessments. The first one used to be multiple choice. The second one used to be written. I see now they've given you three assessments. Is that the last assessment
So
you had
so
to
how
do, or
this
do you have more?
no no so how this works is there's five assessments and there's no exam. So the
Wow.
first three assessments are smaller assessments, and then the
Yes.
last two assessments are in the same format, but
Okay.
they got a much higher weight and they cover the whole syllabus in one go.
Interesting. Yeah. So they have changed it slightly. So it looks like they're not doing exams anymore. It's all assignment
Yeah.
based because of, I guess it's being on, or obviously COVID, it's moved online. So things have changed quite a lot. All right. So you're
That's
wanting help
exactly.
with which assignments?
So that one specifically, assessment three, and I'll tell you why. Some of the answers I picked because I got a very close answer to it, but not the same answer.
Okay. All right. So I'm looking
So
at,
I just really enjoyed your methodology on Excel,
yes.
and I kind of that's how I'd like to tackle the last two assessments, and I kind
Okay.
of just it would help me quite a lot.
All
Yeah.
right, perfect. Okay, so let me download this file and then let me put it up on screen, just so we have it. Okay, I see there are questions and options as well, so that's great. That helps us just in terms of workings. Okay, let me just save this to my desktop.
I sometimes still, even though the marks sort of go okay, I mean, I think I'm on like a 70% average. I
That's really good.
still I still struggle. I still struggle though. Like sometimes with the adjustments and stuff, I sort
Okay,
of bash my head for a while and I
yes.
do some of the calculations wrong and stuff. So just
Okay,
like working through that with you will help me a great deal.
yes.
And
Okay,
depending on your availability, I'd love to set another one up. My next assessment, which weights 20%,
yeah.
is on the 18th. So
Okay.
anytime before then would be awesome.
Yeah. Wednesdays are generally okay for now. So I don't have any problems with availability on a Wednesday. So you can keep Wednesdays in mind. Anytime after, let's say, 4 o'clock is quite open on a Wednesday. So you can decide what suits you best. And then just let me know ahead of time. And then we can arrange it and plan it for that particular week. Okay.
Okay, perfect. Then what I'll do is I'll run through the last because there's two more units. Sorry, I know we're using some of the time here, but
No,
it's
that's
okay.
fine.
There's two more of the units left that I have to study, and then only the final assessment is on all the units. So I'll probably ask you to help me run through just those two units, and
Yes.
then maybe one more session before the final test, which is in like June or something like that.
Okay. All right, yeah, that's fine. So I was wondering what would you like to cover in terms of content. So if I've got context, that obviously helps. You can tell me which modules you want to have a look at and go through in more detail. And then we can obviously revise content related to any of the topics that you need assistance with in terms of revision. So I'm going to open up that spreadsheet, and then I've got Excel open as well, so you can have a look at the actual approach. Okay.
Okay, awesome. And you are recording this, eh?
Yes, I am recording it. So the
Awesome.
recording will be. So the recordings are private videos that will be made available to you afterwards. So that Gmail account that you gave me, I'll assign access to that Gmail account, and then you'll be able to access and watch this particular video again if you need to.
Okay, awesome. It'll help so I don't have to go into like Excel in between and try and
No, no,
also.
and even afterwards, I'll just email you the document. So if I do anything on Excel, I'll just save the file and then send it to you. So at least you have what we've covered today. Yeah.
Oh, that'll be such a great
Okay.
help. Great.
Yeah. So don't stress about that. Um, you just tell me what sections you're struggling with, and then I can revise and cover content if need be. But you wanted to specifically cover this assessment, so that's what I'm going to be focusing on for now. Is that all right?
Yeah, that's perfect. I
Okay,
saw the way you
great.
did it with somebody on YouTube and you kind of just went through the whole thing and you recorded all the
Yeah.
different
Yeah.
adjustments and stuff on the sheet in brackets next to that.
Yes.
And that's sort of like I tried to redo it in myself and I got
Okay.
stuck and I decided to
Okay.
reach out.
Yeah. Yeah. So what's on YouTube is much older videos in terms of past content and just snapshots of certain sections that can help students. So is that how you found me in terms of your? Because sometimes I get referrals from past students, but I assume you saw something on YouTube and that's how you
YouTube. Yeah,
found me.
I do most of my learning through YouTube.
Okay, yeah, it's a
So
very powerful source of information, especially if you find
definitely.
good resources that can definitely help. So yeah, okay, it's always nice to know how students find me. Okay, so question one, I see here you didn't get this one right. I see it's 0 out of 1. Okay, so I'm
Yeah,
gonna try focus on
I
exam
think it's
technique as
listed
well.
below. Sorry, I don't know why it's broken there. It's just the way it's printed, but I think question one is actually below this table. It's just
Yes,
the
okay, so I'm just looking at the mark. So I think that's the mark, and then you've got the
yeah,
question, and then you've got the selection. There's the option, yeah.
yeah, there it is.
Okay.
Yeah, it was the revenue or something, I think. Yeah.
Yes. Yeah, so
Okay,
I'm
cool.
just going to work through some exam technique as well. Sorry. All right,
No
so
worries.
when you're doing any question, a good idea is always to look at the required first, just to give context. Because this is an online assessment, they're going to break it down quite a bit because you're not going to be required to draw up so many workings. You'll see that they're asking for a specific answer rather than asking you to disclose information in a specific format and then upload or submit that. So I don't know if they'll change the approach or if it'll always be multiple choice. You'll know better in terms of what assessments you've done this year in the first semester.
It's always the same.
Is
Yeah,
it
it's
all the
always the
same?
same.
All right, so that's the
Yeah.
approach. Okay, so here they said which alternative represents the correct amount for revenue in the statement of profit or loss and other comprehensive income. Right, so this is disclosure. You should have an idea of what that statement looks like. You know, revenue is generally the first line item. Revenue can be broken up into sales, services rendered as well, but it's disclosure in terms of profit and loss. And here they're looking at the end of the year. Okay, so when I look at this question, I'm scoping it out. I can see I've got an extract of balances for the year. I'm looking at the year because that's important because then I need to know if I need to adjust or not. So here I've got the end of the year already, and this is an extract of balances. So this could be before adjustments, depending on the information that's provided in the question. Okay, I'm looking at retained earnings. I don't need that. I don't need share capital. I don't need inventory. Trade receivables I might need because remember with debtors, debtors are customers that buy from you on credit. So there are credit sales that are affected as part of the trade receivables control account. So you might need that account to work out a figure in terms of revenue. You don't need petty cash, you don't need loan, SARS income tax you don't need. Land and buildings, equipment, accumulated depreciation, revaluation surplus. That's looking at the retained earnings, that's looking at disclosure. Won't need that for revenue. Income received in advance, that could affect revenue because it's income related. And then you've got allowances for credit losses, bank, trade payables, auditors, remuneration. Okay, sales is important. That's an important one. That one you'll definitely need in terms of revenue disclosure. Carriage and sales would be a normal expense. Settlement discount received. Okay, so if you look at disclosure, you'll see in terms of content, when looking at sales. All right, so let me ask you actually, what amounts or what accounts can you offset against your sales figure in terms of revenue?
Let me try and remember. So I think it was, well, the one you've got highlighted, discount received. No, sorry, that's on purchases.
Yeah, that's on purchases, correct.
Yeah.
Yeah, so when you're looking at sales, remember it's net sales. So you'll take any sales returns into consideration. Do you see any sales returns
There
here?
weren't any returns. Yeah, no, there weren't any.
There weren't any, but there is a settlement discount granted. So a discount that's granted, discounts that are granted to your debtors because those debtors are paying early and they're paying full. So if they're paying full, obviously there's going to be a decrease in the actual debtors amount, and that can be offset against sales because technically it relates to your debtors, which is ultimately your sales figure or revenue figure that's going to be affected. Right. So have you been looking at that in terms of disclosure?
I have. I think
Okay.
I didn't take it off of sales.
Okay. And then there's another point here looking at allowance for settlement discount granted. Right. What is an allowance? An allowance is an adjustment that you would have learnt about in FAC 1502. Here, they would have talked about different allowances and different adjustments. So you get provisions or allowances. You get a provision for debt or allowance for debt, bad debts. Okay, there's the credit losses. And you can also have allowances for settlement discounts. So what do you understand by the word allowance? I just want to understand
So the
your
allowance, as
perspective.
far as I understand, is just it's not, for instance, an actual credit loss. It's just what the company makes, or the accountant makes available, or not available, like sort of like earmarks it for potential discounts or for potential credit loss.
Okay, understanding wise, that's good. Yeah. So when you're looking at any allowance, it could be an allowance for credit loss or an allowance for settlement discount granted. So remember, in terms of disclosure, when accountants prepare financial statements, they need to prepare financial statements with accuracy in mind. So when users look at a particular amount, for example, if a user had to look at the trade receivables control account, trade receivables is what's outstanding in terms of debtors. This allowance for credit losses, if there are credit losses will decrease your debtors control account or your trade receivables. So when you're providing for an allowance, that allowance is basically a provision beforehand. In other words, before the actual credit loss arises, that the company provides for based on the company's expectation in terms of credit losses. If they predict that every year a company is going to write off maybe 1% or 2% of their debtors, then it would be prudent to show a 1% allowance for credit losses as part of the trade receivables when disclosing it in the actual financial statement. Right, so when you're looking at an extract of balances, this is before disclosure. This is before the accountant puts the financial statements together. And that's why you have all those adjustments. So this is just an adjustment to provide greater accuracy. And the same thing would apply when looking at discounts that are granted to debtors. Okay, debtors, if the discount is attractive, debtors would tend to use those discounts. And if you're providing those discounts to those debtors, you can provide for the allowance in order to create a set of financial statements that are more accurate. All right, does that make sense?
It does, yeah.
Okay, good. All right, so you've scoped the question. You can see you've got a discount that's granted, and you've got that there. The other accounts wouldn't affect your revenue in terms of disclosure. They're all expenses. And then I need to look at additional information. So allowance for credit losses, don't need in terms of revenue. Income tax, don't need. Authorized share capital, this is looking at issuing shares, okay, looking at the possibly dividends as well, potentially, okay, don't need that. The loan, also don't need that. And then number 5, directors made the following resolutions during the year. The above transactions have not been recorded. A provision against depreciation, that's not going to affect revenue. Inventory, opening and closing stock is not going to affect revenue. And then the revaluation. Okay, so basically, this is just a disclosure question. Right, so the only thing that you have to do here is basically highlight, okay, what revenue is going to be in line with what they've given you in the list of balances. So you're not going to have to use any other additional information for this particular question. Right, I see you went with option 4 there, and that wasn't correct.
Which was literally sales, yeah.
Yeah, which was just the sales figure. You just forgot to take out the discounts. Okay, so
yeah, but you know what happened? I did subtract. I think I subtracted only one of them, and then the numbers didn't add up with the other choices.
Okay. All right.
So multiple choice, I suppose. Yeah.
All right. So if I go to the, okay, so in terms of revenue, okay, revenue is going to be your sales less sales returns less any settlement discount. Any settlement discount that's granted. Okay. All right. So here you were given an allowance for a settlement discount that's granted. That's already there. They've provided for it. That would be part of the settlement discount granted. So you've got the 7,200. So your sales figure was 161163730, and you've got an allowance, a discount figure, a discount granted figure of 7,200. Okay, let's see what we get there. Okay. 115653, yeah, option 1.
First option, okay.
Right, sure. That's just disclosure. So, just in terms of revision, this is a disclosure question relating to FAC 1502. Okay, remember to offset any discounts. But remember, settlement discounts can be offset against your cost of sales and your sales, depending on what you're looking at. So, in this question, they gave you settlement discount received as well. The discount that's received, UNISA will probably offset that against purchases when looking at the cost of sale calculation.
That's right. Yeah, I think I got the cost of sales one right. I think this
Okay, that's
purchases
good.
one just, yeah, I think I might have used the allowance in the
Oh, you
revenue
use this
instead.
figure.
Yeah, you must also forgive me because like it's been so weird without really like
Yes.
any formal lessons. It's kind of been a mishmash everywhere of me just working. And because you don't ever build the framework, you never have to. I've always been trying to figure it out line by line.
Correct. Yeah.
So this might be slower than you're used to.
Yeah, you sound very technical in terms of your approach towards questions. So it sounds like maybe I don't know what work you do, but I think the work that you do is probably quite what's the word, technical. So you approach things quite like methodical, like you're looking at methods rather than principles. There's nothing wrong with approaching it that way in terms of accounting. But with accounting, the most important thing that I can give you in terms of advice is break it down to principles, because those principles are used in different scenarios. And yes, I do understand there aren't formal classes or lectures at UNISA. It's all distance learning. And a lot of the time, you are basically trying to cover content in relation to the topics that are provided. So, just to help you with this particular concept, a little bit of revision. Okay, so when you're looking at an allowance for anything, okay, an allowance would be seen as a provision. Remember, a provision is going to be offset against an asset in most cases, or a liability, but in most cases it's often assets. So for example, if I just take debtors or trade receivables, okay, I'm just using the word debtors because we're dealing with the actual customers that are buying on credit. Okay, remember debtors. Let's assume let's use this amount actually. Okay, so I've got an amount here of 244,200. Okay, that's the current amount. Okay, and then they've given you an allowance here for credit losses. Right, the allowance for credit losses, okay, was provided for at 5200. Okay, did they ask you to adjust the allowance? Yes, they did.
I don't think this. Oh, they have. Okay, yeah.
Okay, so I'm going to use this just to explain a concept because we might even need this later on in one of the questions. So when you're looking at an allowance, all right, the allowance is treated as a negative asset in terms of its principle, in terms of its accounting elements. So when I teach students about disclosure and accounting rules, okay, hopefully you know what the rules are: assets, liability, income, expense, capital, drawings. Is that all right?
Yep.
Okay, so when you're looking at accounting, those are the only accounting rules that are used, but under each of them, you get lots of different accounts. For example, under assets, you could have debtors. Under assets, you could have land, buildings, property, plant, and equipment, etc. Right, there are lots of different types of accounts that fall under these basic accounting rules. And it doesn't matter how far you go with your accounting, it's always the same 6 accounting rules. And that's why if you take a principle-based approach when looking at accounting, it kind of makes it easier because then you can treat things as though they are something. So in other words, when I'm looking at this, I know it's a negative asset. The reason why I'm calling it a negative asset is because of disclosure. Because in the statement of financial position, okay, if I look at an extract, okay, the accountant is going to show trade receivables and they're going to show it as a net figure. In other words, they're going to show the total less the provision or less the allowance, okay, because they need to accurately present that information to users. All right, so if they're asking you to adjust the allowance, the current allowance is 5,200. The allowance for credit losses must be adjusted to 7,600. Right, because this is a negative asset, hopefully you know your rules. Assets have debit balances. There's a debit plus and a credit minus. Do you agree with that?
Yep. Yeah.
Okay, so if it's a negative asset, this particular account has a credit balance. If it has a credit balance, I'm going to have to adjust that based on what I've been told in the question. So if I'm adjusting this to 7,600, I'm going to increase it. So the general journal entry for that adjustment would be as follows: debit the credit losses and credit the allowance for credit losses. All right, because I'm adjusting this allowance, and obviously the adjustment is going to be the difference. So the difference would be 7,600 less the 5,200, which would give you a 2,400 adjustment that would be processed. So this would go to your statement of comprehensive income, okay, basically profit and loss. Okay, this would go to your statement of financial position. Okay, and you would adjust this. So based on my current disclosure, if I go back to this set of accounts, okay, I would basically show this allowance for credit loss. I would add so plus 2,400 to that because it's a credit. I'm crediting that allowance and I'm debiting the credit losses.
Yeah.
Does that make sense?
Yeah.
If you're going to be writing off further bad debt, so here they said a debtor owes 9,300, written off as irrecoverable. The working or the general ledger, the general journal entry, the general journal entry for that would have been debit credit losses and credit debtors / trade receivables.
Yeah.
Right, because this is a direct writing off of bad debt. So it comes straight off your debtors because your debtors account would decrease because assets would decrease. So assets decrease here. And then obviously expense increase here. Okay, based on the accounting rules. All right.
Yeah.
Is that all right? Does that make sense? If there's anything else that you need me to revise or cover, just let me know. I thought that was important because of the allowances, and the same thing would apply for discounts. It's just a provision. Those provisions are seen as, inverted commas, negative assets, okay, because they're offset against something.
Yeah,
Okay.
that helps. This is great. Thanks.
All right. Okay, so question 1 should be okay. Question 2, I see you got correct, so I'm not going to go through that. Or do you want me to go through it?
The only reason I would ask that you go through it, and
Yes.
it's actually, maybe we can, I'm just wondering.
Should we rather
I'd
go
like
through
to-
the ones you got wrong first, and then come back to the ones that you got right?
Sure, and that sounds good. And then also maybe we won't fit into this one, but I'll send you a screenshot of the video I saw as well.
Okay.
That just showed how you went through the whole list of items, and then
Okay.
you applied it to, for instance, a statement of profit and loss, and then you
Yeah.
applied it to the statement.
Yeah, that's a
of loss.
disclosure
But
question.
not for now. This is great. It'll help to go through the ones I got wrong,
Yeah.
and then do the disclosures maybe next
Okay,
week.
yeah, let's do that. Just in terms of time, just to make sure that we cover things that you are struggling with. Because I mean, I'm looking at this, I can see you got it right. So that means you're probably okay with this working. If there is something that we need to address, we can address it. But I think let's focus on the ones that weren't correct. At least then going forward, if it does come up again, you can try answer it correctly.
Yeah, that's perfect. This is the auditor's remuneration question.
Okay, I don't see the question here. Where is the question?
So I think it might be, I don't know why no, why is it such a mess? I can read you the question quickly.
Okay, yeah,
It's
read it out so I can interpret it.
If you go to the adjustments there, just below that table with all the...
Okay, but what does the
all the
question
values.
say if you read it?
I'll be able to remember it if you go look at that, but I'm just trying to get it up as well. There wasn't it was that they pay it. I was trying to remember it, but it's not working.
Okay, which one are we looking at? Additional information point number?
No, I need to quickly get it up.
All right,
Just
it's
give me a
fine
sec.
then. I'll wait for you to do that. Let's look at another one then in the meantime. Okay, yeah,
I'm
question
already
5.
here.
We just need the question.
let
I
me-
see it's missing.
Yeah, let me maybe read it out. So the question is,
Okay.
which
you got it.
do you want me to copy paste it somewhere, or should I just
You can
read
copy
it?
paste it in the chat even if you can.
Yeah, let me do that.
That'll
quickly.
help a lot. Yeah.
I don't know. I didn't even realize that cut off. There's no like easy way to get this stuff off of the website.
Okay, it's fine. I've got it here. Okay, let me copy and paste that into our... Okay, so there's the question. All right, that's fine. We've got it. Okay. All right. Okay, so which alternative represents the correct amount of for auditor's remuneration in the statement of profit loss? Okay, so when you look at auditor's remuneration, again, you need to be thinking about where are you in terms of your interpretation, your understanding. So as soon as you see that, you should be thinking about an expense because that's
Yeah.
breaking it down to its principle. This is looking at disclosure in the statement of comprehensive income. So you're going to be looking at adjusting an expense based on what's given in the question. Right, so then I need to go look at the additional information and I need to see, I've already got, okay, when you say auditor's remuneration, there's it there, 36,100.
And then in the adjustments, they say 30% of it. Let me quickly find it. Maybe it's
Yeah.
also been cut off.
Okay, so then in the adjustments, I've got number 1, allowance, number 2, tax, number 3, shares, number 4, the loan, number 5, directors made the following resolutions.
Within number 5. It's
Is it number
within
5?
number 5. It's the third bullet. Is there a bullet there?
No, there's no bullet here. I just see directors made the following resolutions. And then
Okay,
I
let me quickly
see number 6, provision, inventory. Yeah, okay, that cut off as well.
I'll make sure that I pasted it here in the
Okay,
chat. I'll make
okay,
sure
that's fine. I've got it. Okay, let's copy paste that. Okay, so all right. Okay, so that's adjustment. Is that the only thing that they've given you in the question, hey?
Yeah.
Okay, great. All right. So they say only 30% of the auditor's fees stated above was settled at year end. Okay, so this is an adjustment looking at FAC 1502, and here you're looking at a year end adjustment. Okay, when you're looking at year end adjustments, it can either be a prepaid expense, it can be an accrued expense, it can be an accrued income line item, it could be income received in advance. Those are the 4 main ones that you're looking for. It could also be depreciation, stationery on hand, etc. But yeah, those 4 that I mentioned, prepaid
This
expense,
was accrued expense was this one, I think, right?
accrued expense, accrued income, and not accrued income, sorry, income received in advance.
Yeah.
Okay, those are the ones that you're looking for in terms of those FAC 1502 adjustments, right? So when I read this, they're telling me that only 30% of the auditor's fees stated above was settled at year end. Settled means paid, okay? With the remainder to be paid to the auditors during the second week of March. All right, so obviously we're in Feb. If you're paying auditors in March, that would be seen as an accrued expense. Does that make sense?
Right, yeah. Yeah.
Okay. Accrued expense means not yet paid. Okay, still to be paid, but incurred in the current year.
Okay, I think
Okay, the reason why accountants do that is because of the accrual principle. Are you familiar with the accrual principle?
Yeah.
Okay, good. Right, so income is recorded when it's earned, and expenses are recorded when it's incurred. Right, so if only 30% of the above stated fees were settled at year end. So if I go look at this, okay, where is it?
36,100. I think you've also got it in the.
Okay, there's it there, yeah, the
NG.
36,100. Right, so here they've told you that the auditor's remuneration at year end was 36,100. Okay, but they tell you that only a portion of it was settled. So this represents 30% that would have been paid. So when you pay auditor's remuneration, you would have debited auditor's remuneration and you would have credited bank. Does that make sense?
Yeah.
Okay. Obviously, you've only paid 30% that was settled, so the other 70% is outstanding. Right, so I need to gross this up. All right, so this is maths. Okay, I'm going to take 36,100. I'm going to times it by 100. I'm going to divide that by 30 to get the total amount.
We'll just times it by 0.3.
I get that total.
That's wrong. I think you've got to times it by 0.3. I think for some reason it's timesing before it's dividing on your side.
Okay, hold on. Let's just see. 30% of the auditor's remuneration. Okay, so 30% of the total is
your number there's
36,100.
So it should go up, yeah.
Okay, so 0.30 x equals 36. Okay, so 36,100 divided by 0.3 equals. Let's do that.
Not divided by, you've got to times it by 0.3.
No, you're dividing because you're working by x. You're working x. So x stays that side, take that to the right, it's divide.
That's going to increase the auditor's fees. That doesn't make sense.
Because it's 30%. So you're working out the gross amount. Because they said only 30% of the fee stated above was... Oh, okay. 30% of the auditor's fee stated above was settled. Okay, I'm looking at 30%, this representing 30%. If you're saying 30% of the fee stated above was settled. Okay.
Oh, sorry. So they're saying that 36,100 is 30%.
That's what I'm assuming. That's what I'm thinking.
Just quickly check the answers.
Okay. Yeah. Let's do it.
That would make complete sense. Then I see where I went wrong.
Okay. Let's do it this way and just see what we get. 36100 divided by 0.3 gives me that figure. Okay. So I get that figure. All right. So that's the total. Okay. So the balance would be that figure minus the 36100. Okay, that 84,233 would be outstanding.
Yeah, then I've just completely misunderstood this question.
Let's see it though.
I took 30% of that 36,100.
Okay, let's see it though. What question was this?
There it is.
Was it this one?
I see the answers. See how weird it is. So I'm wondering if the expense was just
okay. So it looks like they haven't done that. They haven't grossed it up. Okay, so they're saying, if I just highlight this part, okay, what they're saying is 30% of this figure is outstanding. So basically, 36,100 times 30%, okay, that's the portion that was settled. Okay, so 36,100 times 30%, this was paid. Okay, the outstanding portion is the accrued expense.
Yeah.
Okay, that would have been 70%.
Yeah, that was the...
Okay, so 70%. Okay, this 25, okay, is the 70%. All right, this is the portion that's accrued. So you would have debited your... let's just think about this. If it hasn't been paid, it's outstanding. That's going to be a liability. So you're going to have to increase the liability. Let's just read this again. 30% of the auditor's fees stated above was settled at the year end. 30% was settled. Settled means it was paid, with the remainder to be paid to the auditors during the second week of March. So that means you're going to create a liability for the difference. Yeah, so you'd have to credit the accrued expense for auditors' remuneration.
Okay, and that's the 25,270.
And that would have been the difference. Okay. That's what you're creating. So you would have to decrease. So what did they ask you here? What was the question asking for? Let's just see.
The question was which
alternative represents the correct amount? Okay, so the correct amount in the statement of profit and loss and other comprehensive income for the year ended 28 Feb. The correct amount would be the amount that was incurred, the full amount. So remember, this was paid, this was outstanding. The incurred amount is the total. So the total would be the 36,100.
Okay.
Okay. Bit of a trick question, actually.
This helped a lot, though.
All right.
Yeah, that helped quite.
Okay, I'm glad it did. So yeah, so basically incurred. Remember, this is incurred. Sorry, I'm typing wrong. Okay, incurred. This is the accrual principle. All right, so you would have provided for an adjustment. The adjustment would have been for the outstanding portion, and then you would have decreased. The amount that was paid was that portion. That's what is paid, that was incurred. In terms of what you disclose in the statement of comprehensive income, you disclose the full amount because the full amount is based on the full accounting year, irrespective of when you pay it. Does that make sense?
You paid. Yeah, got it.
Okay, good.
Just a quick question. I see the time's running out. Do we just rejoin on the same link?
Is it going to time out? Oh, 2 minutes. Okay, yeah, that's strange. It's just you and I.
Zoom,
It's not.
it usually gives 40 minutes.
Looks like it. Yeah,
Yeah, it usually gives 40 minutes. But I mean, if you just
Okay.
rejoin on the same link, it'll.
Yeah, the link won't. Yeah, it'll stay the same. I'll just start it again. Okay, yeah.
Cool.
Before the private, if it was just 2 people in a Zoom call, it didn't have a timer. It looks like it's changed. Yeah. Okay. All right. Question 6, you got that right. Question 7, you got that right. Question 8, you got that right. Question 9, right. Okay, you're doing really well there. 10, you got right. 11, 12, 13. This is looking good. 14, 15, 16, you got wrong. Okay, which alternative represents the correct amount for trade and other receivables in the statement of financial position? Is this still looking at the same?
Exactly the same, yeah.
The same one, eh? Okay.
Yeah.
All right. So let me just write down some notes in the meantime. Okay. All right. This is question 16. Okay. So they want disclosure. So extracts, statement of financial position. Okay. They want trade and other receivables. Okay, remember we spoke about offsetting the allowance?
Yeah.
Okay, we're going to be doing that exactly here. So you'll have your debtors minus your credit losses minus your provision. That's basically what you're going to show. Okay.
Okay.
All right. Where's the figure?
Got it here as well.
There's it. No, that's payables. There's it. 224. 200. Okay. And then we need to process the bad debt and the allowance. The allowance, remember, we said was adjusted. So I'm going to show the allowance with that adjustment we did earlier.
Yes, yeah. The
5,200 plus that adjusted amount.
Cool. I think you just have to reshare your screen there.
Yes. Okay, yeah, I see you're right. It did stay the same. Okay, that's good. Yeah, I just sent it as well. I wasn't too sure if it stayed the same, but I see it is the same, so that's fine. Okay, great. Okay. There we go. Okay, so we were busy doing the disclosure. Okay, so I was looking for the credit losses adjustment, which we spoke about here. Okay, earlier we spoke about adjusting the allowance. Remember that?
Yeah.
Okay, we increased the allowance by 2,400 to make it represent the 7,600. So I need to add 2,400 to the current allowance. Then I need to minus any current bad debt. So if I look at the question, were there any credit losses here?
9.6, I think, in the adjustments.
Yeah,
9.3,
9.6 in the adjustment, but was there any existing credit losses?
I don't think so. I don't
You don't think so,
remember there
hey?
being.
Are you sure? All right.
I'm pretty sure, but I'll
Okay.
double check while you
All right, it's
look there.
fine.
But,
Okay, so if the only bad debt is the 93, then that's all we need. Okay, then we'll take that, plug that into the calculator. Answer gives me, okay, 227,300. Let's go. Question 16. You went with
2320. But you know what
2320. That wasn't
happened?
correct. Okay. There might be
Yeah, it
something
wasn't.
else in the question. Okay, let's go back. Let's look at the question. There's something else that isn't part of this. Okay, so, okay, this is the question. Retained earnings. Let's just see if there's anything else. Okay, there's the control account. That's fine. The allowance for credit losses. Okay, the allowance, did we adjust that? Yes, we did adjust that. Okay, we did adjust the allowance. We increased it. So the allowance is now sitting at 7,600. The question was asking us for the disclosed amount, right? Yes. Which alternative represents the correct amount for trade and other receivables? Okay, if it's trade and other receivables, you're looking at all the other receivables as well. So this is only for debtors. So this is for debtors. We need to check if there's anything else in terms of a receivable, a prepaid expense, for example, an accrued income line item, for example. Okay, those are all receivables as well. So we need to look for other receivables. Okay, so if we go back to the question, okay, let's see here. Do we have any other receivables? Income received in advance is a liability. Allowance for credit losses, we've adjusted for it, we've provided for, that's fine. Bank isn't a bank. Would bank be in other receivables? No, that'll be under cash and cash equivalents. Okay, trade payables, auditors remuneration, sales, carriage on sales. Okay, the allowance for settlement discount granted. The discount that's granted to the discounts received. If you're receiving a discount, that would be
that's
offset.
On your purchase.
Discounts received would be off your purchases. Discounts that's granted would be against your debtors. There we go. Allowance for settlement discount granted. Okay, remember you grant discounts to who? Your debtors. Okay, so we need to adjust this as well. We need to show minus 6,300 here, the allowance. Okay, 221. There we go, option 3.
Okay.
Okay.
All right.
All right, so this was the figure that you needed to include because this was the allowance for settlement. Let me just make a note here, NB. Allowances for settlement discounts granted. Remember we spoke about this. This is going to be offset against debtors, hey?
Yeah.
All right, and that's why you have to provide for that. Because remember, when looking at disclosure, accountants want to represent the information as accurately as possible. If you are providing for allowances for credit losses, that's the allowance for credit losses. Okay, you also need to provide for the allowance for discounts. Okay, I'm actually going to add to this line. I'm just going to move this across. I want to just add that here as well. Minus allowance for settlement discounts granted. Okay, basically discounts that are allowed. Happy with that one?
Yeah, got it.
Okay. Okay, great. So that was 16. Let's carry on. 17 you got right. That was good. 18 you got right. That's good. Okay, 19 you got wrong. Okay, so let's look at 19.
Yeah, and this is very much part of the sort of newer materials.
Yes.
This is some still.
Okay, yeah. So when you're looking at retained earnings, the best thing that I would do in terms of retained earnings would be looking at your disclosure in terms of the SOCI. In the SOCI, you'll have a column for retained earnings. All right, and then obviously the statement of changes in equity would have retained earnings, and then retained earnings will be summarized on the statement of financial position. All right, so I'm going to use the SOCI just to show the calculation. Okay, obviously retained earnings would be a column in the statement of changes in equity. Okay, you'd start with an opening balance, and then you'll work out a closing balance. All right, here they said assume the correct profit for the year. Okay, so we can already include that. Add profit for the year. Okay, profit for the year. Assume the correct profit for the year amount is 164,530. Okay, which alternative represents the correct amount for retained earnings at the end of the year? Okay, so in other words, they want this figure. They want us to calculate what the retained earnings is as a closing balance at the end of the year. Okay, so we need to go look at the information again. Okay, so we saw retained earnings 1st March 2021. That would have been opening balance. Do you agree?
Yeah.
Okay, so when you have retained earnings, maybe just theory in terms of retained earnings. What do you understand by retained earnings?
So it's whatever profit the business has taken from the year before, and it's added to what they've had from. I think. How can I explain that better?
Okay, you're right. You're on the right track. So basically, businesses operate year on year, right? When you're looking at a company, for example, this company, okay, there's going to be profit that's going to be generated during the year. Companies are responsible. Companies don't pay out all their profit. If they do, that'll be a distribution or a dividend. Because you're looking at a company, we need to talk about dividends. Okay, yeah. Dividends would be a distribution out of profit. Most companies choose to pay out a small dividend, and then the rest they retain. Okay, that's a little bit of financial management. Okay, retained earnings, that's the retention. All right, so businesses decide to either pay out or retain.
Yeah.
Okay, the retention part is going to affect retained earnings. So the opening balance, this would have been from prior years. The profit is from the current year. Okay, then you need to less any distributions. So in other words, any dividends. And you need to less any transfers to a reserve. Sometimes there could be a reserve that could be generated or a surplus that could be created. Transfers to a reserve or a surplus, depending on the question. All right, so retained earnings, you've got share capital, you don't need any of that. Let's just have a look here. Okay, there's a surplus. Okay, a revaluation surplus would also be disclosed in the statement of changes in equity. Okay, so while we're doing the working, let me just show that as well. That's in terms of disclosure. Okay, what else do you have? Income receipt advance allowance. Okay, we don't need any of that. We don't need any of this. Yeah, nothing else. Okay, then we need to look at the additional information.
Taxes. Yeah, sorry, profit is after tax.
They told you that you must assume this is profit for the year, hey?
Yeah.
Okay, so you would assume that that's after tax. I'm not going to minus tax from that.
Got you, yeah.
Okay, because that was the profit for the year, that would be after tax. Okay, yeah. So I'm going to leave that figure as is, but yeah, if it was before tax, then you could take off the tax, but we're not going to do that. Okay. All right, let's see. Okay, this shares thing we need to look at. Okay, this is ordinary shares. Share capital consists of ordinary shares. That's fine. The directors issued shares. Shares were taken up by the public. This transaction has not been recorded. Okay, that's not going to affect your retained earnings because there's no dividends there. Okay, the loan.
That does come up in a later question, so we can maybe tackle that next week.
Sorry?
I was just saying it does that authorized share capital adjustment comes up in a later question. So
okay, yeah, then we can look at that, definitely. It's not that bad. We might even finish it today. We'll see. Okay, but yeah, the loan, this is not going to affect it. Okay, there's dividends. I see dividends. Okay, dividends declared 80 cents per share and will be paid at the end of April. A total bonus amounting to 82,500 must be paid to directors. Directors made the following resolutions at year end. Was there anything else here under this point?
No, the only other, it was the auditor's remuneration.
That's
That was
it,
the
eh?
one below.
Okay, and then they said
Yeah.
the revaluation of land resulted in a revaluation surplus. Okay, that's land. That's something separate. Right, so looking at this, the only thing that you would have to include here would be the dividend. The bonus, though, they're telling you that the bonus must be paid to directors. So then we'd have to less bonus. Okay, asterisk assuming this is from profits. Okay, it's not quite clear what they're stating here, but they said this is a resolution at the end of the year. So I'm assuming that this bonus is coming out of the profit after tax. So this figure would have to cover that bonus to the directors. Does that make sense?
Yeah.
Okay, so minus 82,500. And okay, there's no reserve transfer because the revaluation surplus was for land and buildings. It wasn't from retained earnings, so that's fine. Okay, the dividends we need to calculate. Okay, dividends is 80 cents per share. So 0.80 times number of shares. Okay, the problem with that is we do need to look at how many shares they have issued. And that comes up earlier. All right, so did they give you share capital here? Okay, they said share capital was 600,900. Okay. Authorized share capital was that. We need to know how many shares they've issued. Share capital stated above consists of ordinary shares issued. Okay, that's fine. Okay, at 3 Rand 50 per share. Okay, so we have an amount of 600,900 divided by 3 Rand 50 per share. All right, what does that give us?
I went a similar route. That 400,000 NPV just threw me off a little bit.
Let's see here. Okay, on the 1st of December, the directors issued more shares. 1st of December, that would have been during the year. They issued more shares, and that was at 4 Rand 80 per share. The shares were taken up by the public on the 1st of Feb. This transaction has not been recorded. Okay, so if it hasn't been recorded, there'll be more shares. Okay, so we need to add an extra how many shares? 57,000 shares. Okay, but we're not getting a nice number here. The share capital stated above consists of ordinary shares issued at 3 Rand 50 per share.
What is that authorized net present value of shares? 400,000. Because I understood that as an adjustment of the amount above.
Okay, no. Authorized share capital is what the company is allowed to issue. That would be part of that, because when you register a company with the CIPC, you need to state how much authorized share capital the company has and how much of this they're going to be issuing. So they said the share capital stated above. Stated above, to me, that means stated above here.
600, yeah, okay.
Yeah, so this 690,000, because I'm dividing that by 3 Rand 50 per share, that's going to give me the number of shares, right? That's based on the maths.
Yeah.
So I've got that amount of shares plus the additional 57, so 92,406. I'm a little bit skeptical of this amount because it's a decimal.
Yeah.
That's why I'm a little bit concerned, but let's see what we get. Okay, we get that figure, and then less dividends. So dividends would be 80 cents number of shares. So I would take those number of shares and times it by 80 cents. Okay, gives me that figure. Then to work out the retained earnings, it'll be this plus the profits minus the dividends minus the bonus. I'm getting that closing balance. Is that an option? Let's see.
I can't remember. Isn't that last one a double negative now? Because you minus.
No, I added it. Yeah, I know it's a minus, so that's why I added the last one.
Oh, sorry, I see. Okay.
I know because I put it in as a minus, I know I have to add it. Okay, so where was here? Trade and other receivables? No. Which question are we looking at? 19, 18, 19.
A little bit more now.
There.
I think it was, yeah.
Okay, so what options do they have here? Okay, that's not an option. All right, so there's something wrong with the shares then. Okay, delete this. Okay, this figure I think is incorrect. Okay, so we need to look for more
just a quick question on that where it says 400,000 authorized shares. What does the NPV stand for? It doesn't stand for net present value
Yeah,
of the
net
share
present
capital.
value is the time value of money calculation. It's good that you're familiar with that. Okay. But yeah, here it's probably par
So
value maybe
that
or
doesn't
nominal
sound
value.
okay. Okay,
Possibly.
yeah. 'Cause
Yeah, it's strange to see NPV here because this isn't time value of money.
in my head it sounded like they were saying that 600
Yeah, yeah,
is
it's
now
not.
the
Yeah,
net.
it's not a very well worded question because yeah, NPV that's a bit of a distraction. I don't know why they've included that. It might be preference shares, but it can't be preference shares because it says ordinary shares.
Yeah.
Yeah, so it might be nominal value or nominal par value or something like that.
Oh, right. Okay, got you. Yeah.
Possibly. Okay, but yeah, 400 is the authorized share capital. The share capital stated above consists of ordinary shares issued at. Okay, the big question mark here is did they issue all these shares? Let's assume they did. Okay, if it's 400,000 shares, then you would have 457,000 shares that would have been issued. All right, then let's work out the dividends. The dividend would be 457,000 shares times 80 cents a share gives us that. Okay, that gives us a negative figure. Can't be that as well. Was there anything else here in the question that spoke about shares?
No, that was it. That's all.
Was that
all
it?
was. Yeah.
Okay, because my concern is
Isn't
about this. Right.
yeah.
My concern is that because if I do the division, I'm getting a fraction of a share, which is unusual.
And doesn't the fact that the shares are now issued at 4.8, doesn't that mean the new share value is 4.8 instead of 3.5?
No, remember, if they're issued at 3.5, remember this is a separate question. This is share capital stated above. So the
Oh, right.
690,000 above was at 3 Rand 50. Okay, this additional amount of shares, those were new shares not yet recorded. Okay, they said the transaction has not been recorded, so it wouldn't have been included in the 600,900.
Okay.
Okay, because they said more shares were issued at a later stage, but they tell you the transaction has not been recorded. So it wouldn't have been part of that amount. If it was included, they had to have said that.
Got you.
Okay. All right. So I'm gonna leave it as this figure plus the 57,000 gives me that amount, and then the dividends would have been that figure times the 80 cents. Hold on. Why am I getting a different figure now?
It's not.
Is this correct?
Not.
600,900 divided by
Yeah.
350. Yeah, that's correct.
Correct.
Okay, plus 57,000 shares. That looks right. Okay, and then times that figure by 80 cents. Okay, now I'm getting that figure. Is that figure an option?
No, the lowest figure is 150,000.
All right, let's delete the 82,000. I get 182 for, okay, there's an option. Okay.
So maybe they'd already put the bonus into the profit, already taken the bonus off the profit.
Was already paid. Yeah, but that's not good. It's not a great question because you had to consider it because that's why I was wondering about the bonus because if we look at this, okay, point number 5 talked about the resolutions at year end. At year end to me means before, so the profit is declared. I would take out the bonus, eh?
Okay.
Yeah, but if you
Cool.
if you
That's
don't,
something I wouldn't have figured out.
yeah, if you don't take out the bonus, if you assume the bonus was already paid. If you assume the bonus was already paid, then the closing balance is an option. Do you see that?
Yeah, I saw that 181.
Yeah.
I mean 182.
Right. So to me, that probably means that they have taken the bonus
down.
into consideration.
Yeah.
Okay. All right.
Okay,
So
cool.
separate calc.
Mm.
Separate calculation, assuming the bonus was already paid before. Does it make sense?
Yeah, it does.
Okay. All right. How did you do with 20? 20 you got wrong.
It was the
21 you got
dividends.
wrong.
Yeah.
Okay, the rest you seemed like you got wrong, eh? Ooh, yeah, the
Yeah.
rest don't seem so good.
It'll be a while. But I see our time's up. I'm keen for us to keep this sheet open and we jump into it next time you've got a gap. So,
Okay.
I'd like to book next week, Wednesday, so long.
Okay, yeah. Let's just see what the next question is.
I
Question
think it was
20.
dividends.
Yeah, I don't see
Oh,
it.
it's not showing it. Flipping.
Yeah.
I'll also today resend you.
Yeah.
Yeah, let me send the
Okay.
next one. It's question 20, right?
All right. Yeah, question 20. Do you want to do one more? I don't mind.
Yeah. No, I mean, I'm completely fine. I'm just aware of the time, obviously.
Okay, yeah. Let's see. Is this the question?
Yeah, this is question 20.
All right. Okay, so which alternative represents the correct amount for other components of equity in the statement of financial position? Okay, this is a disclosure question. Other components of equity. So when you're looking at equity, okay, equity will comprise of capital, okay, but because this is a company, you're going to have share capital, okay. There could be share premium, but that's not here. Retained earnings and any revaluation surplus. Okay, so they want us other components of equity. So it would be, to me, this is asking about retained surplus, because retained earnings, they asked a question. Share capital, you said there was a question about that, hey?
Yeah, it comes a little bit later.
Yeah, and if it's other components of equity, the only thing I can think of is the revaluation surplus. So
yeah, I didn't completely understand it because it's the. I mean, you're going to do it now, so let me.
yeah. So the revaluation surplus to me would be what this question is referring to. The way they worded it though is tricky because they said other components of equity. But now, which other components of equity are they focusing on? That's the big question. My gut feeling says they're probably asking you about this one. Okay, because I saw I saw a revaluation in the question.
It is, yeah.
Okay, there's the revaluation surplus, the 85,000. Okay, we spoke about this. There's the revaluation surplus. So the opening balance was 85,000. Okay. Right, in the question they told you the revaluation of land for the current year resulted in a revaluation surplus amounting to 101. So revaluation of land is going to increase this by 101,000. So the revaluation surplus at the end of the year would be 186,000. So it's 186 the option. Yes, option 2.
Yeah.
Okay, so this would be other equity.
Okay. It was as simple as adding it. That was.
Well, remember, you're adjusting the revaluation surplus, but you had to remember that when you're disclosing equity in your statement of financial position, okay, in the statement of financial position, you're going to have share capital, share premium, retained earnings, revaluation surplus. Okay, because they've asked me about retained earnings already in a previous question, I'm assuming they're asking me about retained surplus here, and that's why I'm going with that. That's why I'm going with the 186.
Yeah, I've subtracted something. I can't even what. Okay, but that helps. Yeah, it helps to sort of understand how to approach these as well.
Okay, that's what they're asking you about. Is that all right?
Yep.
Okay.
Got it.
All right. How many questions do we have in total? I don't mind finishing this if it's not too bad.
I think there were 27.
It says 29 here.
29.
Is there 29 questions?
Yeah.
Okay, yeah, that's going to be a bit much. Yeah, that might take us another hour or so, yeah. All right, so I think maybe let's wrap up there. Are you comfortable with that? Is that all right? Or you want to do one more?
No, I mean, that's good for me. If we're going to jump on again in any way
Okay.
next time, then I think we can just start off
Yeah.
from there.
I'm just looking at question 21. I see question 21 you got wrong. Maybe if I was you, I would try review what you've done and see if you can maybe pick up on your mistakes.
Okay.
That's always a good idea to review what you've done. You haven't made too many mistakes, just one or two things in terms of disclosure. But other than that, your calculations seem fine. Question 21, so we've got 1. We've got 2, question 22. We've got 23, that's 3, 4. Okay, this one you got right, that's good. Question 6 you got right, that's good. 27 you got right, that's good. 28 you got right. 29 you got. Oh, it's actually only 3. I thought it was more than that. Okay, I thought I had to go through all of them, but you only got the next 3. So yeah, okay, let's finish it. I don't mind finishing it. It's only 3 questions.
Okay, cool.
Okay. At least then we don't have to worry about this assignment. We can put this assignment behind us and we can move forward, and you can tell me what sections and what topics you want to look at. Okay. Yeah, I thought it was all 9 questions, but I see you've got most of them right. It's just the one that you got wrong. All right, so that's fine. Let's do 3 questions. That won't take us that long, maybe 15 minutes plus minus. Okay, maybe less, we'll see. Okay, question 21. Which alternative represents the correct amount for the long-term loan disclosed under non-current liabilities? Okay, so again, this is disclosure. In your extract of your statement of financial position, you're going to have a section for non-current liabilities. Okay? Those non-current liabilities have to be disclosed at the exact value in terms of the loan, in terms of its outstanding balance. Okay, so when you're looking at 28 Feb, you want to know what the long-term loan is worth at the end of that period. Okay, so there's going to be an adjustment here. We just need the amount. Let's find that. Here's it. Okay, the long-term loan. Where's the long-term loan?
Line 5.
Okay, there we go. All right, PWA Bank. Okay, so 102,600. All right, was there anything else here in terms of credit?
No, only in the notes below.
Yes, okay, there. The loan from PWA was acquired on the 1st of March, all right, at an interest rate of 8% per annum. Interest on all loans for the current financial year has not yet been accounted for. The loan is repayable in 4 equal installments with effect from the 1st of March. Okay, so obviously you're gonna add your accrued interest. Does that make sense?
Yeah.
In other words, interest that's not paid. Does that make sense?
Yeah, and that would compound, right, from March 2018.
Yeah, so you're going to have to show 1 March 2018, okay, and the loan is repayable in 4 equal installments with effect from the 1st of March 2022. Okay, obviously the current year was what? Feb, hey?
Feb. Yeah, 2022. Yeah, just before that one, yeah.
Yeah, so basically you're just looking at a loan type scenario. Have you done DSC 1630, the time value of money?
Yeah. I mean, the interest I'm extremely comfortable with. I just don't know where I went wrong. Yeah, I think it was...
Okay, so you're good with time value of money, what present value, future value, all of that's fine.
Yeah. I mean, I've done, I do economics, so we've done all the
that's good.
subject.
Okay, yeah, you seem like a very strong student academically. That's good. So let's see. 8% compound interest. So the loan amount was, okay, 1st March to 1st March. How many years is that? 2019. The 19 will be 1. 20, 21, it's 4 years.
Yeah.
19, 20, 21, 22. Yeah, I'm counting 4 years here. Okay, so we're looking at future value at that point. Okay, so future value, open brackets. Okay, my rate was, what is it, 8%, 0.08?
8%, yeah.
Okay, the number of periods, this was per annum. What is the compounding in this question, though?
It doesn't say it, but I mean, surely it can't be only on the principal. Maybe. I mean, I don't know.
Yeah,
maybe
okay. Yeah, this question's a bit problematic, eh?
Because my guess it would be once per annum, so an annual compound.
You think per annum, so annual compound. Okay, that's fine. Let's go with that. So then the
that
end...
would make sense to me.
So then the end would be 4. No payment, present value would be, let's make it a negative. What is it? 102, 600, close bracket, enter. Okay, I'm getting that figure.
And the exact question was...
Question 21. Which alternative represents the correct amount for the long-term loan to be disclosed? Okay, that loan has gone down. That means there was a repayment somewhere. Are you sure that was the whole question? Was there anything else in this question, eh?
I'll double check quickly, but I'm sure
was that the only thing they gave you about the loan, hey?
So I gave the loan, and then at the loan they say, blah, loan was repayable with effect from March, and then it goes into the director's resolutions. Yeah.
All right, and that's it, eh? Because that's strange.
Yeah, I understood that one of the equal payments needed to maybe be subtracted from the total.
Yeah, but the
amount.
equal payments only start on the 1st of March.
In March, yeah.
So you wouldn't have any payments before then.
Oh, they're asking for interest. Oh, sorry, I'm losing you.
Sorry, say that again, the interest? Sorry, what was that about the interest? Sean, what was that about the interest?
Sorry, I think you're back. Okay, sorry, I lost you completely for a bit there. All I saw was interest on all loans for the current financial year has not been accounted for. Okay, no, that all I understand is that it should be included. So yeah, I don't know actually
interest
how
on all loans. Oh, okay. I think I see. I think I see. Okay, so basically, this 102,600 is not at the beginning. This is at the current year. There we go. That makes sense. Okay, start of the year. All right, so we only need to find the future value for 1 year. Does that make sense?
It does.
So 8% for 1 year. Let's work out that interest. 102,600 times 8% gives me that. All right, so the total at the end of this year would have been the principal amount at the beginning of the year plus the interest that's outstanding.
Yeah, but it goes down. That's the weird thing.
Yeah, that's the problem. I think there's a problem with this. Because this is an assignment, you should be able to report this. Ask them about it, because I would be looking for that figure. Because remember, this was 102,600, and 102,600, where is the 102,600? There's the 102,600. The 102,600 is at the balance on the 28th of Feb.
Yeah.
Okay, that's before the interest was provided for during the year, because they said the interest must still be accounted for. Does that make sense?
Oh, you know what I think?
Yeah.
If that's the amount, they're asking to be disclosed. No, never mind. I don't actually know where it's going wrong then.
Yeah. Ask them about this one. Sometimes there are errors and errata. Hey, that has happened in the past. It wouldn't be the first time this has happened, eh?
Oh,
so,
no. I mean, it wouldn't be the first time it's happened to me. So
also, have you also had some issues with them, Unisa?
Oh yeah.
Okay.
Definitely.
All right, yeah. So I think you're in the same boat. Sometimes they do make mistakes. I'm going to leave this as is. That's the answer for this. I would be looking for an answer that would be showing that. Okay, you'd be disclosing the loan at the end of Feb 2022 at that amount. The amount that you started with during the year plus the additional interest that would be applicable on the loan for that year. That would be the total that you would disclose in the statement.
Yeah.
Okay, so here, check for errata. Okay, maybe speak to them, see what they say. But I do think there's a problem with this question. Okay, right. Okay, question 22. Okay, what is the question here? I'm missing the question again here.
Question 22, I'll quickly, it's dividends payable, but let me just post it in here.
And then also, while you're at it, post 24 as well. I see I don't have question 24's question.
Okay, cool.
All right, 23 I've got. Okay, yeah, we just need 22 and 24. Okay, there's 22. Okay, let's take that.
22 and there's a 24. Just want to turn my light on here quickly.
Okay. All right, question 22. Which alternative represents the correct amount of dividends payable in the statement of financial position? Okay, this is the dividends
So
payable.
I think I'll now be able to get this correct just because of our other working on the retained earnings.
Well, yeah, but remember there was a problem with the dividends payable because we weren't sure how many shares they've issued, hey?
But I think if you got that question right, then you probably got the dividends correct, I think, right? It's that one over there.
Yes, yeah, so that would be the dividends. But is there any dividends here that we have? Let's just see here. Is there a dividends payable or figure here?
I don't think so.
I don't see it. Okay, and let's just see what they said here. It's paid at the end of April. Yeah, so it'll be the same figure actually. You're right.
Yeah.
Okay.
It's there.
Copy that.
I'm on the wrong question again. 18. Right. What did you get at that one? 182, I think, eh? Yeah, 182,948. Yeah, it's there. They just rounded it.
Okay, there we go. That's fine. All right, there we go. That's another question complete. Okay, and then question 23.
Trade and other payable.
Trade and other payables. Okay, so this is disclosure. All right, trade and other payables is basically your creditors, hey?
Yeah. Yeah.
But be careful though. Other payables. So we need to include all the other stuff as well. All right, so let's go back to the question and just see what we have, and then we just add them all up. Okay, so right, the first thing I'm seeing here is the trade and other payables. Fine. So that figure was 189,300. Okay. Auditors' remuneration, sales, carriage and sales, settlement discount received. If I'm receiving a discount, they're going to offset that against your creditors. Let me just think about this. Remember, this is disclosure. So disclosure won't show income and expense. It will only show allowances. So do we have an allowance for settlement discount received? Let's see. No, we don't. Yeah, okay, there isn't anything there. Okay, I see it might time out again. If it does, then we can just join again. I'm probably going to need another 5-10 minutes just to finish off the last one. We're almost there. We've got this question and one more. Were there any accrued expenses? I don't see here. There might be an accrued expense here. Yeah, income tax for the financial year amounted to that and must still be recorded. So plus accrued income tax, because that's payable. That amount was 121,100. Okay, because that hasn't been paid yet. Income tax hasn't been paid. There's no income tax paid here, hey? Yeah.
There is, yeah. There is, but it's got a debit balance. I always thought that's like if you're receiving something back.
Where's it? Oh, here. Okay, so if it's a debit, that means that's how much has been paid. Then we need to look for the amount that's payable. But this is an amount that's income tax for the financial year amounted to. Okay, that's the payable amount. Okay, can you hear me? Sean, are you back?
Yeah, I'm back.
Okay, right, yeah. So remember, if you've got SARS income tax debit, the word debit means this is an expense. So how will you give rise to this transaction? If you're debiting the expense, you'll be crediting bank. So this is something that they've already paid. So if they're telling you in the question that the tax amounted to that and it must still be recorded, that means that's the total tax that's payable for the year. So all I need to do is subtract the amount that I've already paid. So I need to subtract 24,500. Does that make sense?
Yeah.
Okay, because I'm looking for the accrued income tax portion that is outstanding.
Okay.
Okay, all right, I need to check for more accruals. The loan, there's another accrual. That's a payable. Okay, I'm going to add the accrued interest. All right, the accrued interest we calculated earlier. The accrued interest was the 8,208.
Cool. Yeah.
That's also a payable. Okay, the directors made the following resolutions at the end of the year. The dividends that's declared is also payable.
Okay.
Plus dividends payable. That's another payable. All right, and the dividend we calculated as 182,948.60.
I think they rounded it up to 0.949 instead of using
Okay,
decimal.
we'll do 949 then.
Just because it might impact your...
That's fine. Okay. The bonus, okay, remember the bonus? Here they said a total bonus amounting to 82,500 must be paid. Must be paid meaning that's an accrual, so I would have to include that as well. Okay, was there anything else that must be paid?
Yeah, the bullet
That's
point
it.
just below that was the accrual to the auditors, because only 30% of it was paid.
Yes. Let me go back up.
20.
Where do we do that bit here? Here, outstanding accrued expense. Yeah. Okay, the accrued expense is 25,270. Auditor's remuneration. Okay, that's still payable. 25,270. Was that right, eh?
Yeah, that's right.
Okay. All right, so there's quite a number of workings here we need to do. Let's just copy it and let's just work it out. Okay, so...
Would depreciation wouldn't be...
No, depreciation is not a payable. Depreciation is a negative asset. It's disclosed against property, plant, and equipment. Depreciation is not a payable. Depreciation is disclosed against property, plant, and equipment.
Right.
Okay.
Right. Yeah. Okay. Sorry if I talk over you sometimes. It's just sounds like the network's struggling a bit.
Yeah, it's fine. Don't worry. Let's just see. Okay, where's the answer?
24, I think we were on.
This one. Wow, we've got a massive answer. They've got a very small one.
Mm-hmm.
So,
and if it's that they've included...
Looks like they've taken out a lot of these additional other payables. So I'm thinking, let's check those two. Let's put the tax in. So only with the tax. Okay, if we only include the tax, what do we get? 285,900. That's not an option. Okay, let's bring in the accrued interest for the interest. Okay, so if we add interest to that, do we get an answer? That's also not there. It's just going to get bigger though. So looks like it's something to do with the tax. This figure isn't there, hey? Okay, so let's check it again quickly. All right, when we go back, all right, in the actual question, we have
Are you looking for the tax?
income received in advance. There we go. There's another one. Okay, let's go with 189300 plus the income received in advance. We forgot that. That's another payable. Income received in advance is also a payable. Okay, so I would be adding a lot of these together, but it seems like they've disclosed those separately. If they only want trade and other payables, I'm just trying to think of how they would disclose that. If you're only adding those two figures together, I get that answer. Is that one of the options?
Trade and other payables, no. They're all over 200,000.
They're all over 200, yeah. Okay, so let's add the interest. Oh, we didn't add the tax. The tax we said was, let me just go and review that tax question again, because we just need to check that the accrual is correct. Let's just do this correctly. Okay, so income tax for the year ended amounted to that and must still be recorded. So that's what it amounts to, and you've got an amount that you've paid, so the difference is what's payable. Yeah, so that would be correct. You would have to subtract. Okay, so those two amounts subtracted. The tax is 96. I'm getting 292. I'm also getting too much. I'm getting a figure that's too high.
Shucks, man.
Yeah, this one's problematic, eh? Trade and other
So they
payables.
could have it wrong again, and now we're trying to work it out.
Because we added all the payables. Which alternative represents the correct amount for trade and other payables in the statement of financial position as at? So yeah, it's at the end of the year. If it's at the end of the year, you've got to include all the accruals. You've got to include all the payables. All right, so it looks like they haven't included a lot of things because this amount is so small. Let's try something else. Okay, the figure that we have was 189,300. Okay, that was the only figure they gave you in the question. Retained earnings, receivables, the loan was long term. The income tax, yeah, the income tax you definitely have to provide for. This is a debit. Okay, so you have to add the accrued income tax. You definitely have to add that. That's definitely something that would be part of the payable. Okay, then you've got land and buildings, equipment. Income received in advance is definitely added to this. The income received in advance was 6,900. Okay, the allowance, no. Bank, trade, other payables, we've got that. There's the 89,300, that's fine. Okay, the auditor's remuneration, we spoke about that, you'd have to add. The sales, carriage and sales, settlement discount received, settlement discount granted purchases. Yeah, there doesn't seem to be anything else here. And then the additional information. Credit losses, no. Income tax, yes, we did that. The shares, nothing there. The loan, yes. Okay, so yeah. I'm going to just leave this working. This working is correct as it is. The interest, we did include that. The dividends payable, that comes up here. We did include that. The bonus, they said it must be paid. We did include that because that's a payable. And then we also included the auditor's remuneration and the income received in advance. What was the income received in advance figure?
I think that was
6,900. Let's just add it to this. Okay, plus 6,900.
You know what I'll do tomorrow when I go through this is I'll add each of those items one by one and see which gets closest to one of the answers, so I know where they stopped.
Yeah, but because they said trade and other payables, The word other payables means you have to include all the amounts that are still going to be paid. So all your accrued expenses have to be included. So accrued income tax, accrued interest, dividends payable, accrued bonus payable. All of these have to be included. Right, so I'm going to leave the working as is. This one is also one that you can maybe check with them. Because,
yeah.
I mean, the figures that they've got are so small. That means they've left out a lot of the payables. And to me, that doesn't make any sense. You would have to include more payables here.
It increases by a maximum of what's that? Less than 100.
Yeah. Okay. Check this one as well. Not that one, this one. See what they say. Maybe just ask them. You can use this as a working, okay, to help support your arguments. But yeah, see what they say. I don't think that figure should be so low. That figure should be a lot higher. A lot higher. Okay. Even if we just add, for example, if we just add the trade payables and the tax, already you get an amount that's bigger.
Yeah.
Okay, so yeah, find out why or what they want you to disclose there. That'll be interesting to see what they say. And then the last one was 24. Did you paste the question here?
It was the tax.
Oh, sorry.
Yeah, I did paste
it. The chat has refreshed. Yeah.
I'll quickly paste it here again. But it's basically just asking what is the current tax payable.
Okay, yeah, current tax payable. Okay, let's see if we get this one right. If we get this one right, then we know we've got it correct. Because the tax payable figure is this amount.
Yeah, 121 minus. That's also what I did in mine, and it's not one of the options.
Was it not right?
Yeah, the options aren't right. It doesn't have 96,600, okay, which is that figure.
All right, let's think about it. Let's go back to the question and see if there's anything else. Maybe they've wanted us to interpret. Yeah, so you've gone with 96. Oh, 96,600. There's a 96. Yeah, the options don't seem right, and they marked it wrong. Yeah, they marked it wrong. Okay, let's check. I
had a feeling, and I almost went for it. I'm telling you, if I said 94,600, it probably would have been right. I think it's a typo.
Do you think they went with 94,600? But yeah, we need to work it out correctly. If the option's wrong, you can obviously query it, but it needs to be based on the right working. So yeah, what I would do here, just to show you some additional accounting, I would draw up a T account for this one, I want to show you how the T accounts work, okay? And then you can see it here. All right, so this would be for the SARS tax liability, okay? So there'll be a balance here, balance there, okay. All right, so the income tax figure for the year would be debited. So you would debit income tax, which is the expense, and then you would credit the tax payable. All right, which is the liability.
Yeah.
Okay, so income tax, they told you in the question, they said the income tax for the financial year ended amounted to that and must be recorded. So 121,100. Okay? And then there's no balance here. Actually, was there a balance?
24,500.
Was there a balance here? Was there a SARS liability here?
Isn't that it? Or that's just what we paid? The SARS income?
No. This is the amount that's paid. If it's a debit, it's the tax. It's the bank. So that figure would have been debit tax, credit bank.
Credit bank. Yeah. Then there's nothing else. That's all that's related to tax. Okay.
Sometimes there's a payable figure. So there's no payable at zero there. Okay. This amount you've paid. So that would have been 24,500 there. Okay. That would have been bank. All right. So then. Or I'm thinking, Okay, maybe Eunice is saying that this is tax and then this is additional tax. Do you get what I'm saying? So,
Yeah.
so I'm thinking, I'm assuming they're saying the tax already provided for is, what is it, 24,500, and then there's more tax. So add an additional 121,100. That's what I'm thinking. Let's see what we get. That's the only thing I could think of.
That might be the other way, but that's also not an option.
145,600. Is that an option?
No, it's either 101 or lower.
Yeah. All right. So that can't be what they're assuming. There wasn't anything else about tax, eh?
Nothing. Yeah, that was the only two sort of lines that referred to tax.
Yeah. So then this one you can definitely query, because if there's nothing else here about tax, which there is, and that's the only figure, and it must still be recorded, and there's no balance here for tax. Let's just double check quickly. Yeah, I don't see any balance. The only tax figure you have is there. All right, then show them this working, okay? Because then the balance that would have been brought down and carried down. Okay, yeah, so your answer is correct. I would agree with you. You went with the same but remember, the options aren't even there.
Yeah, I went for the closest one.
Yeah, that's a problem. Yeah, this one, definitely query. This one I think they'll probably give you the mark for, because I suspect it's incorrect. I think their options are wrong. Maybe there was a typo. Maybe they went with this option. They're probably going to tell you the right answer was this one. Where is it?
94,600.
So 94,600, but it should be 96,600. Do you see that?
I also think so.
Yeah, I think there's this one definitely. If there's no other information and there's nothing else in the question, it has to be 96,600. Has to be. This one, query this. Okay.
Okay, great.
All right. Okay, Sean. Happy.
Thanks for spending the extra
problem.
time.
I don't mind. It's only a few extra questions. So I'd rather you complete what you're wanting to complete, at least then it's done, and then we can always focus on other things the next time. Okay, but let me know if you want to do something next week. That's fine. If you want to spend more time going through content on your own, and then let me know at a later stage. That's also fine. You can tell me what best suits you. As I said, Wednesdays are best for me, so we can do Wednesdays. If something does open up on any of the other days, then I'll let you know, and then if you want to move it to a different day, we can do that.
Wednesday's pretty good for me as well. Okay. So it'll be great if we can book it in for next week Wednesday. I'm also happy if you add.
Okay, you want me to book for next week already?
Yeah, please.
Okay, great.
And then I'm also happy if you invoice for the extra 40 minutes. I'm happy to pay that as well.
All right. Okay. Well, I appreciate that. Thank you. But it's fine. I'm not going to do that. I'm just going to book for the next session. At least then we sort it for next week. Okay.
Okay. Awesome. That's great. Thanks so much.
You're welcome. Thanks, Sean. I'll send you the video link eventually. It'll come as a YouTube link from YouTube, and then you just need to log in with your Gmail account, and then you'll be able to view it.
Awesome.
Okay. All right. Bye, Sean. Take care.
Have a great evening.
Thank you.
Yeah, you too.
All right. Bye.
Bye.